there's already indication that provisional data being scrutinized by the Bank of Ghana indicates that the revocation of licenses of some 386 microfinance companies and other microcredit companies could save nearly some 1.2 billion in money, but also some 1.2 million depositors. But the question has always been, is that the right decision to take? We've always known that our financial sector has been in some recession mood for some time now. And indeed, if you look at the budget of 2019, that is going to continue up to about 2021, 2022, when we're going to post some great margins. Ultimately, that would also mean that other sectors of the economy are likely to suffer as a result. More so, the decision taken for these microfinance institutions, not only to be liquidated and made insolvent, but subsequently also for the decision for them not being able to provide those services to those entities in our population or demographics that need it. What could be the effect? This is what we decided to do. We decided to bring in a microfinance consultant to help us do some great discussions and then critically analyze the subject as it is. Because the microfinance institutions tend to be the arm or the legs on which many other retail trade, either in markets, squatters, etc., tend to lean on. We have in the studio Roderick Okwampa Aye. He's a microfinance consultant. Thank you for joining me.
Thank you, Roland.
Yeah, and I was just looking through your book. Well, by the way, he's also written a book as well. It's called Comprehensive Microfinance in Ghana, A Hope for the Poor. It was published back in 2008. He needs to update it because now we're in the doldrums. All the things that he predicted in the book really are coming to play. But let's first begin and just ask you, Roderick, did we see this coming?
Great. Let me say, perspectively, I saw it coming, and so I've not been surprised about where we are now. If we say we saw industry-wise, I remember having some discussion with some of the industry players, and I kept telling them that if we don't manage how we are going, the central bank would come after us, because let's take regulation more as a defined rule. And so once you do A, B, and C, you are in the defined rule. But if you do otherwise, you come out of that defined rule, and basically no regulation is going to sit on and look at it. So I still hold the view. We saw it coming. We walked ourselves in here, and we must find ourselves out of this place. So we saw it coming, yeah.
Okay. I live in a community called Ashama. You know Ashama?
I know Ashama.
Just bordering the motorway.
Yeah.
And I have lived through my lifetime seeing people go and take money from the nearest microfinance companies. First, it used to be Susu collectors. Then we went to that level of financing. And somebody will say, for somebody who is in Bekwai, for example, a good friend of mine who teaches at the Bekwai Senior High School, Evelyn Chebafo, who would want to go and take money from a microfinance company in Bekwai, and knowing that this is the predicament of the industry, how worried should she be?
Oh, well, first of all, I think worry on our personal level, we should be worried because of the image that these activities has brought us. I mean, for a lot more people, when you close their eyes and ask them about microfinance, they think about fraud, they think about other issues. But the good point is that, I mean, although it's coming late, let me say this on authority, that whatever we are going through actually more is like a mop-up. The real action, the real activity, the real effect happened some 5 years ago. If I say 5 years ago, what I'm trying to say is that people who lost their money lost it some 5 years ago, 3 years ago. I mean, people who felt the pain of microfinance actually felt it some 5 years ago. And so whatever we are doing largely is administrative processes to sort of clean our books. And so she should be worried, but her worry should also be that, I mean, the ones that necessarily may create that problems for the sector, for now, they've been taken out, or they are being taken out. And so the ones that we have, that the Bank of Ghana necessarily have left to operate, these are microfinance institutions that should give us the comfort to deal with. So we should not be too much afraid of what is happening today.
Then logically, the question would be, I trade with a microfinance company, I go and source whatever credit, but I don't know what happens and how they should be regulated, etc. Because I'm just an ordinary man on the street. What could they have been doing wrong for the Bank of Ghana to take some of these necessary actions? Of course, we know the statement that has been issued as well.
Of course, the thing, if I've worked with the microfinance institutions, I must confess, I've seen microfinance institutions names that I've taught, helped train. I've seen ones that, of course, we put to the process, who are on the list, actually. It's a bit of technical and emotional process altogether to see some institutions that you have helped nurtured and all those things having their name in there. But the biggest problem that I would still talk about is that when we did capital increment, and then I remember 4 or 5 years ago, I said our problem is not capital requirement increase. That was not the problem, because for me, capital requirement for the microfinance institution is a barrier. But the real problem was after the barrier. The real problem is that what people were doing in their institutions. Because when a capital requirement is, providing evidence that you can meet the minimum capital requirement. But providing evidence that you would be able to operate based on prudent microfinance principle and practices was what was missing. And so what happened with the microfinance institutions were that, people saw deposit. People got trust in microfinance. They left their deposit in there. Now the managers and owners of microfinance institutions missed the rudiment and prudential guidelines when it comes to managing money as a financial institution. It is not a simple thing, but unfortunately, with the wave of microfinance, a lot more people thought it was that simple. I've gone to the field and I've seen microfinance institutions owned by a farmer who, not to say all farmers don't, who actually does not understand debit and credit. So these are owners of financial institution, of course. It was because regulatory actually came after the microfinance. So a lot more people got involved. So the issue was more capital, how we managed what we have in terms of deposit and loans and liabilities, how we put our assets into good use and all. And before we realized, it has crystallized on us and we are where we are today.
At some point in time, there was a lot of goodwill for microfinance institutions. There was even the Nobel Peace Prize given to somebody who had initiated a good scheme in Bangladesh that even did a transition throughout Asia, India, etc. Of course, we know the bubble in India and the concern about the government. At the end of the day, who is to blame? If the regulator is not able to regulate or perhaps do the proper supervision, whether they have the right expertise, etc., and then the directors themselves and the management are not able to themselves supervise and manage themselves, who do we put the blame on?
Well, everybody must take part of the blame. The regulator must take part of the blame. The owners must take part of the blame. Largely these two people, if I should put it that way. The regulator, in the sense that, again, microfinance is a complex business. Unfortunately, I came out with this book almost 6 years ago, and largely was because after my study in microfinance, and before I was in it, and then I went back to school to study it, and I could see the very dangerous gray areas in the microfinance sector. So
you saw it coming?
I saw it coming. I've written more than 20 pieces about the sector in Ghana before this book. Unfortunately, it's one of those things. You write, and then it gets through the our shelves. So regulator had a problem with capacity. Owners had a problem with capacity, in the sense that all that we could see was that bankers were becoming microfinance practitioners. But the two activities are totally different.
Why is that?
It's
finance.
It's finance, but that's why we classify it as microfinance. So we have a meso or macro, and then we have the finance level. Dealing with the lower end of the pyramid, it's a different ballgame altogether, because you are actually dealing with small amount of money. That is very risky in the first place. then it has high operational costs, which is a bit different from the bigger banks. Because, for instance, if I do 1 million worth of loan, I take my interest, it covers my costs. I would have to do 1,000 Ghana cedi loan over time to cover my costs. And so if you don't get your model right, you are only incurring cost on you. One of the critical problem with our sector, which I found out, was that, because the banking sector, financial sector is dominated by the banks, the microfinance institutions saw themselves as image of banks. And so they started putting up very good building, beautiful building, buying cars, and then all the other things that you can get in the bank.
You're saying they should be operating in shelters?
You should, there are some models actually that operate one office, but the outreach is not in actually brick and mortar banks.
Okay.
I mean,
so for example, and I was going through literature and I saw some of the pictures. Onwardly, I went into YouTube and did some great research there. Even in some of the states in India, Bangladesh, Sri Lanka, etc., they operate on tabletops.
Absolutely. And see, there are models here. I mean, unfortunately, they are foreigners. I mean, who own, they are in the microfinance institution, for instance. And their model, they practice that they build in the community. They hold the office in the community. The workers actually live in that premises, and they use that point as their outreach points. You understand? So the model was wrong on our part, because we saw microfinance as a miniature bank, and therefore we had to do, from offices to the cars we use, from the logistics and all. But unfortunately for us, we forgot what we call the operational side of all our outreach drives. And so the more we are incurring costs, the more we needed to use depositors' funds to fund the cost. But it shouldn't be so. Actually, our costs should be funded more from the gains that we make.
So if, let's say, for example, there's a model that operates on a brick and mortar rationale, definitely means that you rack up overheads, and ultimately it would affect your profitability.
Absolutely.
Okay.
What
so they didn't get it right.
Absolutely. What we need to do is that, in the first place, you should have in mind microfinance is a risky and expensive business. So your model should always be looking at how you can reduce your cost of operation. That is all you have to do. Because if you go around, whether it's in Uganda, whether it's in Bangladesh, we've spoken of, whether it's India, microfinance institutions mostly are, in terms of pay, it doesn't really, it's purely development in nature. It's not too expensive. But in ours, it's not the case. It's, like I said, there are bankers with good taste coming into microfinance, and you don't expect them to take anything lower or lesser. It is still that taste. So we had a problem with the model that we ran. People rushed in thinking that microfinance is about giving loans. And let me give you an example. I was reading the book by the Nobel Prize winner. And one of the models that I found was that, for instance, if they hire you as an officer in an area, you go there for 1 month. 1 month, what are you doing? You are studying the people. You are studying their culture. You are studying how they deal with credit and others, even religion. And you do a write-up on all your observation. Then it comes to the head office. When you're given the knob to operate a branch day, you're given a target. For instance, you're supposed to do only 50 clients for the whole year. The reason is that when you're doing 50 clients, you are building your model. You understand the model. Then after your 50, they give you the go-ahead to grow. But in our case, you have a microfinance institution starts today, and they tell you that I want to be in Ghana in the next 5 years. The dreams were big. But of course, the activities in there did not support it. You understand? So those are some of the problems that we had.
Well, I can equate it to the bubble or the recession in the United States, 2006, 2007.
2008, yeah.
Yeah, but it had been predicted by 2002, 2003 by some great thinkers on Wall Street that definitely the real estate sector was going to see a bubble, and ultimately there's going to be that tumble as we saw. In Ghana, there have been some write-ups here and there on the banking sector. Now, you come to the microfinance level, and it looks like perhaps the look and feel of normal banking, normal commercial banking, corporate banking, gave a certain head start and some dreams for those who wanted to start off. In your own investigations, and observations. How was it possible for those who were practicing bankers to be owning microfinance companies at the same time? And what training may or may not have they received before they started?
Yeah, like I said, one is possible. Two, regulation was a bit lagged behind the microfinance sector. Regulation happened actually, let me call it 2010, when BOG released its first regulation in terms of what we call the guidelines. So by the time we were actually being on there are 4 levels in the microfinance development, and I think we were almost at the second level, and regulation came in. So before regulation, you had quite a number of them coming in, and after regulation, because some of them had put in their own investment, they decided to quit their jobs and come and stay in microfinance. And the truth is that most of them also saw it as a very lucrative job, because of course, in terms of theory, if you read 2008, when the financial crisis actually crystallized in the world, the institutions that survived were the microfinance institutions. I mean, Bangladesh, Grameen, and others are big microfinance institutions, and all these things came up during that 2008. So it looked promising, it looks good, and everybody who had their eyes for figures alone would jump on board. So bankers thought, okay, well, if I deal in high street banking, why can't I deal with low end of the market? And so they came in, they were CEOs, they were credit officers, they were whatever officers that we can think of, and then they started managing microfinance without the capacity that is needed. Of course, like I said, if you sit in the classroom and you go through people who have actually practiced microfinance from all the areas that we come from, Uganda, Kenya, Bangladesh, and others, you realize that it's a different mindset, it's a different capacity that you need in order to make microfinance what it needs to be. Because we need to remember one thing: microfinance is developmental. Beyond it, that it is not anything.
Just pro-poor. You're saying it's pro-poor.
If I say pro-poor, fine.
It's for the mob rowers.
It's for the mob rower, but that is only the beginning. But the end is developmental. So we need to see more of the end of the institution. That if a client walks into a microfinance today, by the time it goes through the 8th or 9th level, that client must have a testimony and say that, okay, because I encountered, my financial literacy skills have improved, my business management skills have improved, and in terms of even asset, I've been able to save this amount of money. That is the kind of thing microfinance does.
Now, at the end of the day, the Bank of Ghana, through its own Act 930, is trying to make sure that it does this with the powers that it has, and it has those powers. But the end result, ultimately, will be that the ordinary person who is in a market somewhere, let's say at Nima or Malata or somewhere at Adabraka, is going to be the sufferer, or is going to be at the end of the chain, going to suffer. How do we resolve their predicament then, in the short and medium term?
Well, I think if you look at the revocation notice, I mean, those provisions have been made, especially for depositors, in the sense that if you have your money locked up in some of this institution, all that you need to do is to prove that you have it, and then your deposit would be given. If you check the figures, and because it's purely microfinance, it's around 1.2, like 1,200 for the average, if I look at what the Bank of Ghana has provided and the kind of clientele we are looking at. So in the short term, some kind of respites have been provided for depositors. And like I said, the only difference with our case, especially in case that we are actually not solving a problem that happened today. We are solving a problem that happened like 4 years, 5 years. So most of the clientele have gone through the pain. They've gone through the hardship. They've gone through, the denial stage or whatever. And so this provision, for me, I see it more as some kind of, I wouldn't say a miracle, but something that a reliever. For most people, I'm sure they actually thought they've lost their deposit, especially for the microfinance institutions. That is one thing. Then the other point may be the people who have actually invested in the microfinance institutions. They invested purely for returns, and for that maybe it's a different discussion altogether. But for the deposit, the people who actually went there to do business, like put my money there for safekeeping, they have been provided for by this revocation, and some of them would actually receive what their savings, and then that is helpful because, of course, for the people who are down there, their monies are not huge, if I should put it that way, but their monies are meaningful to them. And so when you take 1,000, we take 2,000 out of the pro-poor or the lower income earner, you've actually dealt with them a bigger blow. And so I'm just hopeful that this one would save some of the situation.
At the lower ebb of the sector, we have the rural banks. Of course, we have the ARB Apex Bank that tends to do the regulation in that area. And then also, they also tend to serve that tier going down. What should have been the linkage between those tiers with microfinance and the needs that they serve the people?
Well, I mean, one of the issues that we have we have 4 categories of microfinance institutions in Ghana, and they all are standalone apexes. And some of them have a very defined structure and rule, like the Apex Bank, and it happened some from 2002. So it's been there for a number of years. And so in my book, one of the things that I wrote was how the microfinance institutions could leverage or learn from the rural bank and the Apex Bank. It's in a few of the examples that we have gone through, the experience we have gone through, and whatever. But the bigger issue is that we had Apex bodies that were not like the Apex Bank, if I should put it that way, in terms of capacity, in terms of logistics, in terms of all other issues. So they couldn't necessarily do the things that, for instance, the Apex Bank and the rural banks could do. Maybe having a managers conference on a yearly to review their activities, having what we call the, let's say, financial statement of all the banks that will put you in categories, whether you are good, you are bad, you are whatever. So board members could even measure their officers against the national reports, which also came in as a very important measure. So there are a lot of clamor now that they are looking at, can we have an apex for the microfinance institutions that would do the things that, let's say, the Apex Bank and other things are doing? Is welcome. There are things that we need to be looking at, but we should also remind ourselves where we are a bit late. And so if you really want to build a structure that is going to take about 10 years to stabilize the process, we should be thinking about what best method that we can do.
In your estimation, what's some of the best remedies?
Best remedy, for me, and I keep saying it, I mean, I have said that we have too many apex institutions in the sector, which is creating a lot of tough ground. So microcredit thinks that this is our ground. I mean, GAMC thinks this is our
so you're saying
so what I'm saying
consolidation?
Is that for the apex institutions, I think a consolidation would do, and consolidation where one will sit on the top, let me call it like a central bank, and then issue the rules, regulations, monitoring, and activities to the sector. In that, what I think would happen is that it will streamline the processes so that we don't have problem in microfinance sector mirroring itself in the microcredit issue. But if you have one institution that is taking care of them, at least you are interacting with yourself, you are interacting with the other apexes, and so you are able to streamline your activities.
No matter what we think, the collapse of the banks, definitely, and the actions so far taken by the Bank of Ghana, of course, the government also coming in with that needed boost. At the end of the day, it's a level of tiers. They all depend on, there's so much interdependence. And once you have a disjointed one, definitely is likely going to affect the other. At what point in time do we then need to take the actions and say, this is how we want to go, and what should be the timelines? Especially with these actions that so far have been taken, leading to even the microfinancial institutions being where they are currently.
Well, like I said, the time is now, because in the first place we've delayed in
well, we have delayed, but what time do we have from now to the time that we want to achieve?
Can I really put a timeline to it? But what we need to do for
what are some of the best practices around the world? I mean,
the best practice around the world, basically, I would say that the rural banking Apex Bank is one of the best models. I mean, if you scan through literature, you don't have it anywhere. You only have it in Ghana, where sort of rural banks owes the Apex Bank, where the government gives it a legislature and a banking, the backing to do what is needful. In other institutions, we don't have so many big different institutions that would have to, tussle themselves around. In Ethiopia, for instance, it used to be one MFI, one commercial bank, so that is not a big headache. And so what we need to do for now with what we have is to look at how can we solidify our Apex structure and make them more resolute, providing the necessary monitoring and supervision, building the capacity of the MFIs, and ensuring that we have a safe and sound institution. Because the truth is that we cannot leave it to central bank, because literature will say, and that's the truth, that you need about 6 times the funding to do a microfinance monitoring compared to doing a major bank. Do you know why? Because, for instance, you're doing a microfinance that is in a village somewhere, a small institution. But if you go on site or if you go off site to do your monitoring, you still need the same logistics. You still need the same funding to go and actually supervise that institution. So it's more expensive doing that than doing the central bank. So I would go for a single Apex structure that would take care of the entire sector. Yeah.
Oh, very well.
Yeah.
Thank you very much. It's been a great conversation. We hope that for all those who have been affected, they can get the remedies as needed. They've waited that long. Yeah. They've been waiting over the last 4 or 5 years. So at least all these remedies coming from the Bank of Ghana could help solve it. You wanted to say
I just wanted to say my last word. I've been reading the 14 points by the central bank, and from where I've not seen the data, or sort of, but from where I sit, you could see that a lot of thinking have gone into it. I mean, in terms of...
You commend the Bank of Ghana?
Yes, because it's a whole literature. The 14th question is a whole literature that everybody who actually wants to get to understand what is happening should actually take time to read. For instance, the Bank of Ghana says that we don't really expect too much job losses because most of the institutions that we're dealing with actually are not even operational. They are insolvent. And that is the factual. You may have 1 or 2 of them that were operating, but even with those people, they have cut down their operational sizes. I mean, and they are only mostly there to create an image that we are not going anywhere with your money. We are here. When you need that, you will find us. Although we cannot pay depositors, we are genuine. We don't want to go anywhere. We cannot go anywhere. So we are here. So a lot of the institutions actually had closed shop. I mean, some of the officers were finding their levels and all. So basically, it's difficult, but the truth is that I think we all should be relaxed. We should not be too emotional about all the things, like I said. No panic, absolutely, because whatever we are going through, again, I said, if we should panic, we should have been panicking 3 years or 4 years ago.
So you're saying those who are at the end of the value chain, the consumers, the customers, etc., they've been through a lot emotionally already.
They've been through a lot.
This one is just a remedy.
This is
almost like a good luck to them.
Absolutely. Absolutely. They've gone through a lot. They've lost it. They've gone through the pain. They've been, they've taken some remedial actions themselves already. So, I mean, we should relax and find out how best we can face the future with the ones that are in existence and what we can do out of a microfinance.
Thank you. It's been a great conversation. Great insight in there. If we can have the time and do a deeper conversation on what those down there will be going through and how they need to pick themselves up, even though they've gone through many other things over the last 4 years already. I think that will help. Now, we've dealt with the institutions. We've also had some great discussions on what actions have been taken by the Bank of Ghana and going forward, what they need to do. As we wrap up, let me just ask you just one more question on that. When it comes to regulating who will be a director or owner of a microfinance, perhaps the Bank of Ghana needs to make sure that it's more stringent than it was before.
It actually was stringent more.
No, yeah.
That's what people don't know. Let me give you one
looks
example.
Like it didn't work, definitely.
For instance, there were times I got opportunity to serve on people, some boards. Let me put it that way. I mean,
you mean some of the boards of these
of these microfinance institutions, and you go through the process, and BOG says, okay, you are already in the sector, and so you cannot serve, and that was the rule. So maybe what I would advise actually is for them to look at that particular rule, because sometimes the people who have a bit of the knowledge, who may be working in other financial institution, can bring their experience to bear on the activities of the microfinance. So those are the issues. What I'm trying to say is that, so it debarred a lot of the people who could practice or who could bring practical, reasoning to the microfinance from becoming board members. Those are the things that we need to also look at to ensure that we have some fine balance.
Yeah.
On the boards, yeah.
Well, I want to wrap up, but I'm just getting some messages that some of you want to comment, especially having been interested in being customers of some of these institutions. But my director is saying I can steal some 2 to about 4 minutes and get some four calls from you, our viewers. So please make sure that you call us on this line 03022216991 or 2. Again, 03022216991 or 2. We're going to put that on your screens very soon. But please make sure you call us. Let us know if you're a customer, have been a customer. You've also been having some difficulties with your institution that you've been transacting business with. Please let us know what you think. Again, 03022116991 or 2. We're going to put that on the screens for you. You can see, and then you can call. But you're a regular, please make sure that you call us. If you've had any experience with some of these microfinancial institutions, microcredit institutions, please let us know, because we know that they are the center of trade and commerce, retail, the lower or the downstream sector of our financial sector. They are in the communities. You can find them in Oda, anywhere, as a mine can say, elsewhere, communities in Treponi, everywhere. So please let us know. 03022116991 or 2. Let us know what you think. If your institutions is also part or are part of these, please let us know. But okay, so we have Maxwell on the line. Good morning to you, Maxwell. Maxwell, good morning. Good morning, Maxwell.
Yes, good morning. Abdul Razak from Tamale.
Abdul. Desiba.
Yes. Nah, that's right.
Where exactly in Tamale are you calling us from?
From Kalarga.
Ah, that's great. I think I know that community. Please go ahead, please.
Okay. Good day to your panel. He served us a lot, and I have an experience with one of these microfinance institutions.
Mm-hmm.
Yes. I have my money lodged with them for some time. I made some savings there, and at a point I went to get my money. You get the story of, the manager is not there. Come the next day. It went on for a very long time. Up to date, I haven't had my money, and recently I went to check around there, and the office had been closed for a very long time. And someone called me that they had come to pick up all their stuff from the office. Right now, I'm very, very cash-stranded. I want your advice. I want to be advised as to what I should do to access my money. I'm speaking of express savings and loans.
But in order not to give you away, in what sums are we talking about? Because Roderick was telling me about just small sums that you customers tend to deal with. Averagely, what sums are we talking about?
Yeah, about 6,000 cities.
6,000, that's a lot of money.
That's a lot of money.
Averagely.
Yeah, so basically, I mean, that was a rough...
What can he do?
If you look at this is express savings and loans, which are a bit, in terms of category, they are different.
They are up there.
Yes, they are up there. So I'm not surprised at 6,000. I mean, what I can say is that if you look at the plans that are coming, this is for the microfinance. And so definitely the savings and loans revocation and plan will come.
Okay.
Yes, that one would also come. So please be informed on it. It will come. Yeah.
We have Kwejo Boateng. Abdul, thank you very much, and we've enjoyed your contribution. But we have Kwejo Boateng. Kwejo Boateng, where are you calling us from?
I'm calling from Kwawu.
Which Kwawu is big? Where in Kwawu?
Kwawu in the city.
But Kwawu is big. So which part of Kwawu?
Kwawu Praso.
Before.
Okay,
Before,
very well. Please go ahead, Kojo.
Please, my concern is about savings and loan. That is the first highlight issue. I don't know when the Bank of Ghana is also coming into also.
Yeah, okay.
The customers deposit for them.
Okay, so just use your knowledge to do. We know we're not talking about this tier,
absolutely.
yeah. But do the explanation again, and then they'll get to know that we have various tiers.
Yeah.
And
just to say that we have various tiers. I mean, the savings and loans, they form one. The microfinance institutions, the microcredit also form, and then the Susu and others also form one. What we are dealing with now is more of the microfinance institutions. But if you look at the BOG's plan, there's a grand plan for all the problems in the various sectors to be dealt with. And so I'm sure the savings and loans, the express and others will come along. So let's call this a first step, and then wait for the next line of action to help salvage the situations. Yeah.
Well, it looks like many customers are having a lot of problems with the financial sector. We have from Achimoda, Isaac Opare. Isaac, good morning to you.
Good morning, sir.
And please go ahead. We're talking microfinance or microcredit institutions this time around. They are not savings and loans. They are different.
My name is Isaac, and then I'm calling from Aprade.
Oh, Aprade.
Yes.
Okay, please go ahead.
And concerning this one, it's about a GN Bank. That one, does it fall under this one, the GN Bank?
GN Bank issue? No, it doesn't. No, well, they've now been downgraded to savings and loans. So they were a commercial bank downgraded. So,
okay, so they are not included, eh?
No.
Okay.
Some remedies, I'm sure, have been provided ultimately. I'm sure you listened to what the statement have been in the report from the Bank of Ghana when that was done, the downgrading of GN Bank to GN Savings and Loans. Okay, so let's get this call from Techimai. NS Okran is calling us from Techimai. NS, good morning to you.
Yes. Good morning.
Yes, do you save with or do you deal with a microfinancial institution or microcredit institution?
Yes, good morning.
Good morning.
We've really enjoyed your program this morning.
Thank you. Thank you.
I have Noble Dream. We stayed with them for about 2 years now. They sold up, and we have about 20,000 with them. And from your panelist, your panel this morning, I heard him say that all those people would also be catered for, and I wanted to make sure if that is the case.
Noble is part of the list.
Yeah, actually, I've not seen Noble because Noble is actually a very old story. I mean, if you look at it, if I should say very old story.
Is it part of the 4 years before?
Yes. Noble's problem was part of the earlier problems that we had. And let me be fair, I've not really seen their name here. But if I have to go by the technical provision or definition, they will form part of the microfinance institutions. And if they are,
what remedies can they get? Let's say they've not been catered for. Or let's say Noble has not been announced, for example.
If not been announced, well, maybe you still have to get to the receiver, and then the receiver would explain things better for you. I don't really know the full terms of reference of the receiver, but if we have to go by the category, the category of microfinance,
the categorization,
Noble, exactly,
they fall under.
They will fall under it, yeah. So they still would have to take your evidence to the receiver and then have a conversation, yeah.
But let's look at this. In order for the receiver to determine the indebtedness as well as the order of ranking of these creditors for dividend distribution, the statement said a creditor administration process will be put in place. And so all these will be taking place. We have from Tamale, Ohene Yeboah. Good morning to you, Mr. Yeboah.
Good morning, Mr. Roland.
Please.
Thank you for taking my call.
I'm grateful that you called too.
I have a technical problem.
Go ahead.
Yeah. It's about the categorization of these financial institutions. Sometimes you find it difficult to identify which category they fall into when you want to deal with them. You don't know whether they are under microfinance. Do we have any direction as to knowing where they fall within? For example, with Bayport, I don't know where they fall in. But at the end of the day, I feel they are just robbing people. So such banks to such financial institutions, they should be looked at very well, because in the sense that you go and you don't know where they fall in, whether they are microfinance or whatever. So there should be some specification that will give us that direction.
Well,
to know where they fall in.
Well, that's well noted. But also, if you look at the company's code, it's indicated in there, in some of the clauses in there, that you need to put your insignia, your direction, etc., on the frontage of your offices. And if you don't do that, that's a contravention of the company's code. Two, those signages will give you the inscription, whether they are savings and loans or microfinance institutions. Right?
Absolutely, you're right.
Yeah. So right. it's all in order.
Yeah.
I think that we as consumers or customers we're not watchful.
They are there. But microfinance institution must have microfinance in their name. Yeah. Microcredit will
if
have
they didn't do that, that's a contravention of the company's code.
Yeah.
All right. So let's go to Tufo Bempa. Tufo Bempa, you're calling from Kumasi, Shanti Regional Capital.
All right. Hello. Good morning.
Morning.
Hello. Good morning, Walker.
Hello.
Good morning.
Bra Tufo.
Yeah, good morning. Hello.
Good morning.
Yeah, can you hear me, please?
I can hear you, sir.
Yeah.
Please lower the volume on your set and speak to me directly on the phone. I think that will help us.
All right. I am calling from Kumasi, Magazine. My problem, I save at savings and loans, at Kumasi Magazine. And the problem I have is the Bank of Ghana. When it started, hello?
Please, I can hear you. Go ahead, please.
Yeah. When the problem started, the Bank of Ghana, in my opinion, should have come out to educate the people on the ground, the traders. Because it might happen that, or it might be true that the directors might have taken money out of the institution. But the panic was so much, and some of the traders wanted assurance from the governor or Bank of Ghana. So they should have come out earlier on to educate traders, so that people who were, some of us who had the fear that it was going to collapse and the institution will run away with our money, some of us would have even stayed back, and they should have helped the institution. So the governor should come down and they should stop the English too much. And sometimes they come and speak big English. They think the ordinary traders on the ground, understand. It's very, very bad. So, Walker, the governor should come down, or they should take people who can speak, go to the market centers and educate people. Then my second question is that is about the job losses. You can't say that some of the institutions had already closed, so there are no job losses. When the institution like BO sit down and what the auditors or did things that made this happen, you understand? And then you come to say that they are not going to job losses. Meanwhile, you BOD or the staff or the governor, people are enjoying your faster life. Let us not forget that people have lost their job and they are living in this country. Today,
okay, your point has been made, Mr. Tufo. Thank you very much. And again, he's talking about another tier of the banking sector. The financial sector is having. But let's take is there a last caller? Okay, so we go to Teshiman once again, but this one it's William Uto. William Uto, good morning to you.
Yeah, good morning.
Yeah, do you deal with a microfinancial institution or microcredit institution?
A microfinance institution.
Okay,
yeah.
Please tell us your experiences.
First of all, good morning to your listeners. We all can congratulate the regulator for the recent action that actually got the weeds out of the field, leaving the seedlings. But there is still another issue that the regulator should be looking at: the interest rates that they charge the microfinance institutions. It is shocking to note that some of them charge up to 60%, 48%. And what is also amazing is that after a year of having paid maybe the principal, they continue to charge you the same interest rate for the next year and the next year. If you should have a loan for like 3 years, when you are charged at 48% for a year, the next year when you have paid like part of the principal, they wouldn't do any deduction. Then the next year you still be paying the same principal with the same interest. So in essence, it will be like 48 times 2. The next year, it will be 48 times 3. So I am also adding my voice, little though some of us are through. We want the regulator to actually ensure that they don't exploit and that they don't actually rob the customers this way. Because they are robbing customers. Well, I'm a victim, though, and sometimes because of challenging institutions and pressure, you are not able to stay away from those those things that they offer. You go into it and you realize that they're cutting. They are just robbing customers.
Yeah.
After a year of having paid your principal, you are allowed to pay the same interest the next year. I'm telling the third year, the same principal with the same interest after they have taken some amount of the principal. So the regulators should, and then when you ask them, they will tell you that even the main bank do same.
I think that some experts have had cause to complain about the extent of interest payment regime that we have across board. It's not only peculiar to the microfinancial institutions.
So, but the fact is that is it good for an interest rate to be charged like 48% for a year or 36% for a year? Well, then after they have claimed that the principal for the 1 year, the next year you are still paying the same interest with the same principal. The government, the government should be looking at these things too.
Well, thank you, William. William has a point there.
What I was going to say is that, I mean, as clients, you must shop. We call it shop. When we are teaching financial literacy, we say shop around. That's why you don't have only one microfinance institution or one bank or one savings and loan. So please shop around for who would give you the best sort of interest rates and their other charges. And then if you have cause to complain, you have to go through the right procedure to make your complaints in regards to what you are being debited or what you are being paid, what you are paying for as an interest rate. You can even talk to the consumer agency about all this problem. It can be solved. I mean, for the point is that as we speak, our interest rate regime is not controlled, and so we cannot talk about controlling interest rate. But what we can educate people to do is to shop around. If you think that there are problems about your interest charges, speak about it to whoever you think has the ear to help you.
Well, thank you very much.
Thank you.
And we've had some great conversation with you, some discussion. So, and I'm hoping that we, the viewers, or those of us who are there watching us, also come have a point or two to pick from this. The conversations will continue on what your difficulties are. This time, we want to go to a lower level, go to the communities and try to have a feel of what experiences have been over the last 4 or 5 years. Thank you very much.
Thank
also,
you.
Roderick Kwampa Aye. Is the author of this good book. I'm hoping that he can republish it at the next edition, so to speak. Comprehensive Microfinance in Ghana, Hope for the Poor. And again, it's a pro-poor initiative. It's not only peculiar to Ghana, it's around the world. If well regulated, it's one of the best means by which you can provide for people in various communities who don't have. Well, that's been our discussion. We want to have a discussion on the rains and the roles being played by the National Disaster Management Organization. We just entered June, and already the past experiences over the last 1 month have not been too good. But let's talk about the rains, let's talk about floods, etc. Would also apprise you of a statement from Mahama Yariga, who apparently has been summoned by the special prosecutor, but that court case he's disputing says that the special prosecutor, who is asking permission from the speaker to release him, that can happen based on the regulations we have, and also what the Ghana Constitution says about the immunities of MPs and the roles they have to play, and also their own activities. Please stay on. We'll be right back.